All right, let's get right into it. We're looking at KalVista Pharmaceuticals' latest earnings report, and honestly, it's a real head-scratcher. On one hand, the financials looked like a miss, but on the other, the market's reaction told a completely different story. So today, we're going to unpack that paradox. So here's the puzzle, right here on the screen. Look to the left, the financials. The company posted a loss of $1.12 per share. Wall Street was only expecting a 91-cent loss, so that's a pretty big miss. But then, you look to the right. The stock jumps over 10% right after the earnings call. So, what gives? And that really is the multi-million-dollar question, isn't it? The big money investors, the analysts, they clearly looked right past that earnings per share number. They saw something else, something they thought was a much, much better indicator of where this company is headed. And our job is to figure out exactly what that was. Well, the answer wasn't hidden away in some super complex spreadsheet. Nope. It was all about the launch of a single new drug, a launch that management themselves, on the call, called nothing short of extraordinary. And this, right here, is where the real story starts. This one number, 460. This is the key that unlocks the whole thing. In just the first 8 weeks, KalVista got 460 patient start forms for their new drug. Now, to give you some perspective, that's nearly 5% of the entire patient population for this disease in the U.S. I mean, that's not just a good start, that is an absolute blockbuster signal right out of the gate. So what is this miracle drug, EKTERLY? Well, it's the very first, and this is critical, the only oral on-demand pill for a rare disease called HAE. You gotta understand, before this, patients had to deal with injections. An oral pill is a complete game changer in terms of convenience, and that's exactly what the market is betting on to totally reshape treatment here. And hey, you don't have to take my word for it. This is straight from the CEO, Ben Felco, on the call. When the guy in charge of the company tells you that the launch is going even better than their own best-case scenarios, well, the market listens. That signals some serious confidence. And the story gets even better when you dig into the details. This isn't just about that one big number. We're talking about over 250 different doctors who are already writing prescriptions. Nearly 40% of them are already starting multiple patients on the drug. And check out that last point. They're already seeing paid refills come through. That's the proof right there that this is real, sustainable demand, not just some free sample trial. So how does all this amazing launch news circle back to that financial miss we started with? Simple. The success didn't just happen on its own. The company spent money, for sure, but it was a calculated investment, a strategic move to transform themselves from a research company into a commercial powerhouse. This chart just says it all, doesn't it? Look at the shift here. Spending on R&D, the science stuff, actually went down. But SG&A, that's selling, general, and admin expenses, it absolutely exploded. We're talking a 154% increase. That money is the sales team, the marketing, the whole machine you need to launch a drug. This is what it looks like when a company flips the switch to go time. So yeah, the spending was high, but look at what it produced, the company's first ever product revenue. That's a huge milestone. And maybe most importantly, look at that bottom line. They've still got over $191 million in cash that gives them a runway all the way into 2027 to get this launch right without having to go back to the market for more money. The market saw that and thought, okay, this is de-risked. They have the fuel to see this through. And believe me, the story doesn't stop in the US. The market wasn't just getting excited about a successful American launch. No, it was looking ahead and pricing in a very clear, very near-term plan for this thing to go global. This timeline lays out that next wave of growth perfectly. You've got a huge decision coming up in Europe this October, and if it's a yes, it comes with 10 years of market exclusivity. That's a massive competitive moat. And right on its heels, you've got Japan and the UK coming online. This isn't just one product in one country anymore. This is the beginning of a worldwide franchise. Okay, so let's put on our analyst hats for a second. We've gone through the quarter. We get the paradox. So now what? What's the trade? What's the thesis we're taking into the next earnings call? For me, this is a clear outperform rating. The thesis? I'm calling it the European momentum play. The idea here is that the market still hasn't fully grasped how strong the refill numbers are going to look or the full impact of that European green light in October. So the action is to own the stock, but maybe juice the return with some call options timed around that European decision. The logic is simple. You're betting the EPS miss was just noise. The real signal, the pure alpha, was in those 460 patient starts and the global roadmap that's unfolding right now.
And of course, I have to end with this. This is not financial advice. Please always do your own research before making any kind of investment decision.